So what does a trustee of a special needs trust do? They have a very, very important role. They have to learn about and meet with the disabled individual and the family. That is the very first thing they have to do. They have to really understand the needs of the disabled individual and the family situation, hopefully, that that individual is living in. Because family members very often will contact a special needs trustee and ask for distributions on behalf of the disabled individual. So the special needs trustee really has to understand what the family dynamic is, what the needs of the disabled individual are, and really how the communication is going to occur between and among the disabled individual, their family members, who may or may not be living with the disabled individual, and the trustee. So what goods, services, what are the living arrangements in the environment that the disabled individual finds themselves in? And very much this depends upon the disability of the individual. If they're in an environment that is protected and safe and secure, then the trustee is going to have fewer concerns than if this individual is in a situation where there may be individuals trying to financially exploit them, or that it is not a safe and appropriate living setting for them, or commensurate with their needs. For example, if someone has physical disabilities and they're living in a 3-story house, how are they going to navigate within that living environment? Is there an elevator in the house? Is there a mechanism? Does that person perhaps have a bedroom on the main floor? Are things accessible to that individual? All of these are considerations that that special needs trustee needs to take into account. The trustee derives his or her or its power and authority from the trust document. It is a legal document that literally sets out the responsibilities, the duties, and the authority of the trustee. So the trustee has to really read and understand the duties and the responsibilities and authority as expressed in the trust. And very often, unless this is a professional trustee, an attorney needs to assist the trustee with understanding what that role really is. Because the terminology, as we've already seen, can be somewhat arcane, complicated, and nuanced. And so the trustee really needs to understand what their role is, particularly if it's a family member. And that's just the tip of the iceberg, because they need to absolutely learn about the requirements and restrictions of the benefit programs that the disabled individual is participating in, and investigate other programs that may help that disabled individual. As we're going to see and just scratch the surface of a number of benefit programs that disabled individuals may participate in, the trustee really has to understand what they can and cannot do with the assets in the trust as it relates to those public benefit programs. Because remember, this trust is called a supplemental needs trust. And at its very core, the law was written to intend for the monies and assets in the supplemental needs trust to supplement, not replace, public benefits. Now, that being said, as an attorney that drafts these trusts, I create language that gives the trustee the latitude to make discretionary judgments based on the needs of the disabled individual, to sometimes decide that this public benefit program may not be adequate or appropriate for the needs of this individual. So the trustee can, by the language of the trust that is written in the trust, decide to use trust assets for a particular good or service or item needed by the individual that may be covered by a public benefit program. And so it may in fact jeopardize for a period of time or entirely that person's eligibility, for example, for Medicaid, because there may be an insurance program that is affordable based on the assets in the special needs trust, that actually is more comprehensive and more responsive to the needs of that disabled individual than Medicaid. So even though very often individuals who are disabled and beneficiaries of special needs trust also are participants in Medicaid, the trustee may decide, you know what, that's not in the beneficiary's best interest, and they're going to purchase a private insurance plan if that is possible. So the trustee must also be aware of changes in the applicable benefit programs that are available or in which the disabled beneficiary participates, because those rules are changing constantly. They have to know the individual's current and possible future needs for care and the expenses involved. So, can they manage in a home setting alone? They may be able to manage now, but in 20 years, will they be able to manage alone in a home setting alone? Will they need someone to come in and check on them? Will they need, for example, a care manager? Will they need home health care? Will they need other supplemental services to enable them to remain at home? Or will they actually need to move into a more supervised or assisted living setting? And those needs may change over time, and thus the expenditures that the trustee makes will change too. So the trustee has to not only be aware of the current present needs of a disabled individual, but also have a long view. Now, parents who may have created their own trusts and may have multiple children may be in a quandary, because you may be saying, I understand that my child who has special needs may be able to benefit from public benefit programs, and I'm leaving money in a special needs trust, but I also want my children who don't have special needs to be beneficiaries of that trust. The trustee, though, has to really look at the current needs of the special needs beneficiary, particularly if we're talking about a first party self-settled special needs trust or sole benefit trust. They have to basically act with blinders and look at what those needs of the disabled individual are, and not look at all at the needs or desires of what's called the remainder beneficiaries, the people who may be beneficiaries of the trust after the death of the special needs person. So the trustee plays many roles, as you can see. They have to determine what the immediate cash flow needs are. So when we have assets in a special needs trust, certainly the assets can be invested, but they're not going to be invested in the stock market. So if the stock market crashes, you're not going to end up with any assets to manage. You want to make sure that the investments are safe and secure so that there is growth, but it is not growth that is going to be dependent upon the vagaries of the stock market. It's going to be a more conservative, moderately invested panoply of investments, so that there's income that's available for immediate needs, and also principal for needs in the future or for larger expenditures. The trustee obviously has to determine what any goods and services are immediately needed. And very often, the way this happens is if someone suddenly receives an inheritance, has been receiving SSI and Medicaid for years, and receives an inheritance, all of a sudden there's this money that's never been available. So the special needs trustee can suddenly look and have more latitude at what could the disabled individual really benefit from, and how can this trust be best used for them. Because one of the beauties of the special needs trust is that it can be used not only for the medical and psychosocial and psychological needs of the individual, but it can be also used for vocational needs, for entertainment, for vacations, anything to enhance the quality of life of the disabled individual. This is one of the reasons why this is, I really think, such a great piece of legislation. Also, the trustee has to develop, often with professional consultation, a life care plan, so that the needs of the disabled individual are projected out in time, and therefore the use of trust funds can be extended over the lifetime of the beneficiary as those needs may change. I have a client right now who was injured in a car accident and suddenly received a very large settlement. Previously was on Medicaid because she was a low income earner and has children, but then she was in a car accident. So she suddenly has come into an enormous amount of money, has a special needs trust that may be drafted, but maybe not, because of the amount of money that she is receiving. But one thing that is essential is to look at what her needs are going to be over the remainder of her lifetime, because she is going to have significant medical needs over her lifetime due to residual injuries from this car accident. So the trustee of whatever trust is created, because she definitely wants a trust created to make sure that that money is safe and secure, but also so that there is a trustee that can help her budget and anticipate what future needs may be. Develop a distribution plan and a budget for regularly occurring needs. Obviously, rent, if someone's living in a living setting where there's rent, if there is a home, mortgage payments, and again, this is dependent upon the benefit programs that this individual, the disabled individual, participates in, as we'll see in a couple of minutes when we talk about benefit programs. But to develop an ongoing budget for the needs of this individual, either that are paid by the trustee directly, which is really most often what happens. The trustee pays for goods and services needed by the disabled individual directly to the vendor of goods and services, so that money, again, doesn't come into the hands of the beneficiary. And then the trustee needs to work with an attorney to counsel the family very often about the uses of funds, particularly if it's a self-settled or sole benefit special needs trust, because families, don't always get along. And if we're talking about money that has come into the name of a disabled individual, the family may feel that, we help our disabled brother or sister. We should be entitled to some of these funds, and that is not necessarily true. There can be some mechanism, but it has to be defined in the trust. And the trustee really needs to adjust expectations of family members in these situations, and very often of the disabled beneficiary themselves. So the legal duties of a trustee are fourfold. The duty to administer. The trustee must fulfill his or her or its duties consistent with the instructions set forth in the trust and the needs of the beneficiary. They have the duty of loyalty. And I was talking about this a minute ago. They have the duty to administer the trust solely in the best interest of the current beneficiary. So even though parents may have created a trust that name other children or other beneficiaries, the trustee's focus when they're administering a special needs trust must be for the benefit of the disabled individual. And that is the duty of loyalty, to make sure that their focus is on the current beneficiary and not worry about remainder beneficiaries. They also cannot engage in what's known as self-dealing. They cannot use any trust funds for themselves or any of their needs. Now, they can be reimbursed for out-of-pocket expenditures that they may make for the disabled individual. They can certainly be reimbursed, but they cannot purchase or sell assets to or from the trust. They cannot borrow or loan money to or from the trust for themselves or for their family members or their friends. That is absolutely a breach of their fiduciary duty. And we'll get into the definition of what a fiduciary is in a minute.
Can the trustee charge a fee?
Yes, the trustee can charge a fee. It is dependent upon the terms of the trust. If a parent is creating a trust, it is solely dependent upon whether the language of the trust permits payment of another individual who is the trustee to be paid. Certainly, if the trustee is a corporate trustee, they are going to be paid based on their then current fee schedule because they won't serve if they're not paid.
Okay, I have a question. Can someone be a trustee for more than one trust?
Yes. So just to expand upon that, the answer, they can be trustee for more than one special needs trust, but in doing so, they have to keep absolutely pristine accounts and books because each trust is going to have its own tax ID number. And they have to make sure that the accounts that are set up are specific to that trust. So we haven't really kind of talked about the practicalities of a trust. And for those of you that are familiar with trust, I'm going to apologize, but I want to explain exactly how this works. The trust is actually a document on paper that explains the duties and responsibilities and role of the trustee and the uses of the money in the trust. But how does that happen? So money is received by the trustee through inheritance, a court settlement, a court judgment, a whole variety of ways. And the trustee opens an account, usually, hopefully, an investment account with Morgan Stanley, Merrill Lynch, whomever. And that money is invested. And it is in the name of Debra Schuster, trustee for the Ann Mangelsdorf Special Needs Trust. So that does a couple of things. It identifies that I am acting in a fiduciary or representative capacity for Ann. I am the trustee of her trust. So if I write a check to, if Ann needs a computer, and Ann is on, even if Ann isn't on benefit programs, I would be able to give her money anyhow for a computer. But if she's chosen a computer and really isn't great managing her own money, I'm going to write the check to Best Buy, and it's going to say, Debra Schuster, trustee. And the name of the check will be the Ann Mangelsdorf Special Needs Trust. So really, that's kind of, the trust itself is the document, and then there is an account usually, or accounts, there may be more than one, in the name of the trust. Prudent administration. The trustee, again, this is where the prudent person standard and the individual as a fiduciary has to invest and handle the money in the trust as they would their own money. Now, hopefully, obviously, the trustee, if they're an individual, they're going to be responsible, they're going to be timely, and they're not going to waste the money, certainly, on frivolous things that they may feel be, really benefit this person, but really is not going to serve that person well because it may not last, may not enable the trust to last as long as it may. So a non-professional trustee must use such care and skill as a man of ordinary prudence would in dealing with his or her own funds. That is the prudent person standard, and that's really what a fiduciary is. They're entrusted to handle someone else's money, and they have to prudently do so. They have the duty to inform and report. They have to talk to the beneficiary about how their money is being used. Even if the beneficiary may not understand everything, they have to try to communicate to the best of the beneficiary's ability to understand. And they have to provide required reports to state and federal agencies as requested and required by law. Budgetary considerations. Does the beneficiary need a residence, accessible vehicle, computer, burial plan? So these are some of the things that a special needs trust of any kind can pay for. Health insurance, we talked about. Sometimes the trustee may decide, Medicaid just is not going to benefit the beneficiary as much as an Affordable Care Act policy. Or the individual may receive Medicare and may not even need Medicaid. So they may choose to purchase a Medicare supplemental policy. Credit and debit cards, this is always a question. The trustee should consider advising the family to obtain what's called a True Link card for the use by the family or caregivers on behalf of the beneficiary. Because in practicality, the trustee is not going to always be accessible. It may be a family member, but if it's not, the family may be out and about and making purchases for the disabled individual. And a TrueLink card, if you go on the internet and look up TrueLink, it is really a tremendous tool that enables certain expenditures to be made. It enables reporting, tracking. It's really a wonderful tool. The account that's attached to the card should be funded as needed by the trustee, and the card should only be used for the beneficiary's needs. Debit cards really should not be used because they operate as cash, and these transactions can't be tracked for reporting purposes and can be considered cash. So the special needs trust must be the account owner and administrator. And again, the TrueLink card will enable the trustee to obtain monthly accountings. If the beneficiary uses the card and they're receiving SSI to pay for food or shelter, the disbursements will likely reduce their SSI payments. So parental support. Monies in a first-party special needs trust are not intended to replace a parent's legal obligation to pay for a child's needs until that child attains the age of majority, which in Missouri is age 18. However, if there are goods or services that the parents cannot afford, the special needs trustee must evaluate the parent's income and assets and the costs of needed goods and services to ensure that funds are not used to replace parental support, but certainly are used to benefit the disabled individual, because that's what they're for. We talked about compensation of the trustee, appointment of the trustee. If a court establishes a first-party special needs trust, it may appoint an individual that is nominated in the petition that is filed with the court, or may have a policy of only appointing a financial institution. I can tell you that most of the time, St. Louis County will appoint a nonprofit, what's called pooled trust, to serve as trustee. Not exclusively, but very often they will do that. If a court establishes a special needs trust, reporting obligations are usually only to the state and federal agencies and not to the court. So if an individual who needs a guardian or who has a guardian and comes into money and has been determined or adjudicated, meaning the court has ruled that they're disabled, meaning unable to handle his or her own finances, the court will likely require that a conservatorship be opened, meaning that an individual be appointed, and it can be the same person as the guardian, and require that a conservatorship be opened with those funds that are in that individual's names. But what we often do, and that I'm doing even tomorrow, is filing a petition that instead of having a conservatorship be established, ask that the court establish a special needs trust so that there are not the requirements that that money be constantly accounted to by the court, and that there constantly be petitions requesting the court for how the money can be used. So the creation of a special needs trust will both maintain benefit eligibility and, in this case, avoid the need for a conservatorship. So individuals named as trustees. When an individual is named as a trustee, it is often a family member, whether through a first party or a third party special needs trust. And there should always, always be at least one successor trustee named, because you never know if something might happen to the initially named trustee. The trustee appointed should be financially secure, not subject to anyone whispering in their ear and saying, "Oh, you can borrow $5,000. I know you're going to pay it back." They should be detail-oriented. Obviously, there are many details that need to be understood, and have the time to devote to serving. As we've already explained and talked about, there are many, many aspects to being and serving as a special needs trustee. So one may consider having the individual trustee bonded, meaning that that individual obtains a surety bond to make sure that they use the funds in the trust for the benefit of the disabled individual, and there's no temptation to misappropriate or misuse funds. A bonding company, if there is misappropriation or misuse of funds, will replenish funds depending upon the circumstances. Now, anyone that is appointed by the court as a conservator is required to be bonded. So this is not such an unusual concept. The other thing that someone may want to consider is naming a trust protector. That means a third-party individual to kind of oversee how the trust is managed. And that can take many forms and have many duties attached to that. But they may want to consider talking to their attorney when they're drafting that trust about naming a trust protector. Additionally, they may want to require that there be background checks, the Family Care Safety Registry, the Employee Disqualification List, the Missouri Highway Department Criminal Background Check System. These are all things that really should be done before a trustee is named. So another aspect of all special needs trusts is usually that the disabled individual themselves should not be able to appoint a successor trustee, even if they're allowed to remove a trustee. Again, that's to ensure that public benefit programs can't point to the trust or the disabled individual and say, well, we really think you do have control over this trust. The trustee should consider having a team of experts who are regularly consulted, a financial advisor, an attorney or benefit specialist, a CPA, and certainly healthcare providers, mental health professionals, nurses, psychiatrists, care managers, depending upon what the individual's disability is. I always put a default provision in special needs trusts for the appointment of a successor trustee that is an institutional or pool trust in the event that an individual is not able to or refuses to serve. Again, excellent record keeping is one of the very first things that I try to impress upon any individual that is serving as trustee. Basically, if anybody has seen the movie Jerry Maguire, basically you have to keep checks, invoices, bank account statements for every single month, a recording of all income into the trust and all outflows going out of the trust, organized monthly for the lifetime of the trust and beyond. Because remainder beneficiaries, even though they may not be those individuals that the trustee thinks of when they're administering the special needs trust, those remainder beneficiaries can certainly ask the trustee, so show us the books. How is this money handled when you were acting as special needs trustee? No commingling of funds. When a trustee is acting, they must keep the funds of themselves and the special needs trust separate. That is one of the foundational concepts of serving as any type of trustee. Institutional corporate trustees. Anytime I create a trust, if somebody is naming individuals, I always suggest you name an institution as kind of the safety net, or a pool trust as the safety net trustee. But verify an institutional trustee's experience with administering special needs trusts. Unfortunately, many financial institutions in town that used to administer special needs trusts are getting out of the business. They're finding that it is very labor intensive and very expensive. So some of the larger financial institutions, even though they're excellent financial institutions, they're getting out of the business. And if somebody has a trust, a revocable living trust that has a special needs trust in it, they're referring that special needs trust to a different trust company. So it's important to find that out. And sometimes you may not know. You may have created the trust 20 years ago, and unfortunately, that financial institution may not be handling special needs trusts anymore. Request regular, at least biannual meetings of the trustee, the investment manager, and any other individuals hired or retained by the trustee to meet with the beneficiary and the trustee if meeting with the beneficiary is feasible and makes sense. And again, encourage the use of a special needs panel, even for a corporate trustee, and really, especially for a corporate trustee, whether it be family members, healthcare providers, etc. The Special Needs Alliance is an excellent, excellent resource for all things pertaining to special needs. There's the Special Needs Trustee Handbook, which you can print out right now as soon as we're done, which has a lot of this same information in it. The Academy of Special Needs Planners and the Special Needs Alliance are comprised of attorneys that deal with special needs, benefit programs, and all of these issues. And there's an excellent manual, which is a book, so it's a little bit thicker, called the Special Needs Trust Administration Manual, and it's a guide for trustees that was drafted by a number of attorneys in Maryland, but it also is an excellent resource. Here is my contact information if you have additional questions.